All right, the end of the year is right around the corner, which means, yep, it's tax time. If you're looking for ways to shrink that tax bill before the deadline, you've come to the right spot. We're going to dive into some fast, super useful tax deduction tips. Let's do this.
Okay, so maybe you did the smart thing. You ran the numbers to estimate your taxes for the year, and oof, the result wasn't exactly what you wanted to see. You're going to owe. I get it. That's a stressful moment, right? You see that number and your stomach just drops.
So what you've got is what's called a tax gap. It's pretty simple, really. It's just the difference between what you've already paid in throughout the year and what the government says you still owe. And here's the kicker. That payment is due January 15th. Now, that might sound scary, but don't panic. The great news is you still have some time to actually do something about it.
And this is where the magic happens. How do you take action? You've got this amazing tool in your toolbox to shrink that gap, deductions. Seriously, think of them like levers you can pull before the December 31st deadline. Each one you pull helps lower your taxable income, and when that goes down, so does the amount you owe. It's that direct.
Okay, so where do we even begin? Well, your first stop, the first big question you have to answer is all about itemizing. Are your individual deductions going to add up to more than the standard amount? This is a huge decision, and it can make a real difference.
So, you've got two basic paths you can go down. Path A is the standard deduction. It's a simple, fixed dollar amount, super easy, anyone can take it. Path B is where you itemize your deductions. This means you make a list of all your eligible expenses and add them all up. The whole point here is to figure out which of these two paths is going to save you the most cash. And figuring it out is actually pretty straightforward. It's just 3 steps. Step 1, find out what your standard deduction amount is for this year. Step 2, grab a calculator and tally up every single one of your potential itemized deductions. And Step 3, compare the two numbers. Whichever one is bigger, that's the one you choose. Boom, you've just guaranteed you're getting the best tax break possible on this.
So, you're probably asking, what kind of stuff can I even itemize? Well, some of the big ones are charitable giving. And yeah, that includes both cash and the miles you drive to volunteer. Then you've got medical expenses, including mileage to and from the doctor's office once they go over a certain threshold. And of course, there's the big one, state and local taxes, or SALT as you'll hear it called. That's your property and income taxes.
All right, now let's switch gears. If you're a business owner, this is where things get really fun. You have a whole other playbook available to you with some seriously high-impact ways to lower your business income before the year is out.
Of course, you've got your business mileage. That's a classic. But here's a really powerful move. Accelerate your purchases. Think about it. If you know you're going to need a new laptop or a new phone for your business in January, buy it in December instead. Thanks to some depreciation rules, you might be able to write off the entire cost this year. You can also do things like pay down business debt to deduct the interest or prepay for services like tax prep, which leads to a really clever pro-level move, prepaying your vendors. Seriously, it can be as simple as a quick phone call. Just ring up a contractor you use all the time and say something like, "Hey bud, can I give you an advance against the retainer for future services?" I mean, think about it. This is the definition of a win-win. You get the write-off this year, which helps close your tax gap. And what do they get? They get cash in hand early, right before the holidays. It's not just a smart financial play, it's a great way to build goodwill with the people you work with. Okay, let's keep going. We've got a couple more smart tax plays to talk about, and these aren't just for business owners. These are valuable deductions that a lot of people just forget about.
And this is a huge one, so listen up. Student loan interest. If you are paying on student loans, you can deduct the interest you've paid. And what's really cool is that this is an above-the-line deduction. That's just a fancy way of saying you can take it even if you don't itemize. It just straight up reduces your taxable income.
And we're not talking about a small amount here. You can deduct up to $2,000, $2,000. That's a serious chunk taken out of your taxable income. So please, please do not leave this money on the table.
Okay, so we've been talking about a lot of specific tactics, right? But the real secret, the key to unlocking all of this, is bigger than any single deduction. It's about shifting your mindset from being reactive to being proactive.
So what does being proactive even mean in this context? It means you have to know your target. You need to know that tax gap number we mentioned right at the start. Because once you have that number, once you know exactly how much you need to lower your income by, all the other decisions become clear. Suddenly you know if buying that computer is worth it or if you should prepay that vendor. Your target dictates your strategy.
And look, the clock is ticking. We are in the final countdown.
November is when you need to be estimating your taxes and figuring out your gap. By mid-December, you really need to have a solid plan ready to go. Why? Because December 31st is the hard deadline for almost everything we've talked about. Once that ball drops, your options are gone, and all that's left is writing the check on January 15th.
You know, all of this really comes back to a powerful shift in how you think about money and taxes. This isn't about finding shady loopholes or dodging what you owe. Not at all. It's about legally and ethically using the rules as they're written to your advantage, to build your own wealth. The goal, as the source material so perfectly puts it, is to become an ethical millionaire.
So, as we wrap this up, I'm going to turn the question back to you. You've got the tools, you see the timeline. So, what's your year-end tax plan going to be? How are you going to shrink that tax gap before it's too late?